You're listening to Biotech Hangout, a live and unedited weekly discussion of all the latest news in our industry with a group of biotech insiders. I'm Chris Garabedian, and my co hosts today are Yaron Werber and Sam Fazeli. We'll also be joined by BioCentury's Washington editor, Steve Usdin, for the second half of the show. For more information about our hosts and guest speakers, or to listen to the most recent episode, please go to biotechhangout.com. Um, so we often like to start off with kind of market sentiment, and so before we jump in, it was a big earnings week. I wanted to highlight there was a news um, reporter, an article by Adam Feuerstein that was posted, and it was entitled "Biotech is in a dark place," and he basically highlighted that it's been a long slog over the last several years, and we're not really seeing major signs of optimism. Interest rates remain high. He highlighted a few things, and notably, he thought that we just took too many biotech companies public with 700 public biotechs. He felt that we should almost impose a rule where we have to delist three of those before we let one new IPO come. So the idea that 200 or so are trading below cash, and that this isn't the sign of a healthy market. Interestingly, there was an exchange on X where Jason Kelly, the co-founder of Ginkgo Bioworks, was kind of challenging him a bit and wanting to instill more optimism by citing Lilly and Novo's successes and value creation. And so, but there are exceptions to the rule always. But would love to hear either of your thoughts on this and just market sentiment. And I know you guys have a sector performance sentimometer here that you do. So, any comments or thoughts to this sentiment, and anything that your data is showing to either support or rebut that?
Yeah. So maybe let me. So we do two different products. You mentioned one is a centimometer, which is a big survey. We get like 150, 180 investors chiming in every quarter, and we've been doing this for around 15 years. And we also, in the beginning of each year, we do a sector performance notes. We do two. One using the JP Morgan and the sector performance after JP Morgan as a predictor for the year because it's a big conference, and then we do it for our Cowan conference because that's probably the second big one. So maybe I'll just chime in really quickly on both. History is a sage advisor, and it's not always perfect, but it's a lot more predictive than not. And we started this year flat, and you would think, hey, that good or is that bad? Well, in the last 24 years, because we go back to 2000, we only started flat like three times, and usually when we do that, we're kind of flat to down. And we then outperformed right after JP Morgan, and then we gave it all back. If you look at our centimeter, then overlay that on top of it, we started last year the same way. People were very much hiding in large caps. By the end of last year, into the election, we were at an all-time high enthusiasm for small caps, and investors were looking for performance. And when you look at the centimometer historically, that was an outlier. So you knew we should be correcting somewhat. Well, then we hit the wall with the election. The good news, the centimometer is now back to winter is coming or winter is here, and it reversed drastically. Usually, it takes about 2 quarters to bottom outliers. So I think we're getting back to people are pretty freaked out for a good reason, right? Right. We're hearing like it's never been this bad. It's over. The VC venture model is broken. Um, this is kind of when you start hearing things like that. To me, it feels like we're getting to the bottom slowly. RFK is a big sort of unconnected wrench, and now in the system, there's concerns now that he's asking for resignations of the FDA and office heads. Inflation is up, but look, a lot of it is getting factored into stocks. I mean, everything I'm looking at, a lot of stocks are down 50% for no reason. I know the indices are flattish, but the indices are a little misleading these days. Um, the macro side a little bit, I think we're getting closer to the bottom. Things kind of bottom faster, but it might probably be another 3 months until we bottom. That's kind of where we are.
Yep. Yep. Sam, I know you cover a lot of larger cap names, and look at individual stocks. But any comments on this and the broader sentiment from what you're seeing?
Yeah, I just had a question actually, Chris, for your own. What's the composition of the buy-siders? Is it generalists mostly, 50-50? How does it hang?
No, that's spot on. That's a great question. As always, it's mostly sector specialists, 90% from the US, and long short. Long only and long short, probably more long short than long only. There's just more of those around.
Okay, that's interesting. I mean, look, I know we like to beat up the XBI because it's not a perfect. I mean, Josh has deliberated on this quite a bit and explained. But it is an index where, when Daphne was talking about generalists last week, it is an easy index to use to see how the sector's doing. So, I've just got it open in front of me on my Bloomberg. I've got which is, what was it? Somebody put it out saying 5 years of nothing. It's correct. It's exactly five
Yeah.
years of nothing.
Yep.
And at the same time, the S&P 500 has doubled. So it's not difficult to be pessimistic when you look at this. If you plotted this back to 20 years ago, it actually doesn't look that bad. But then who on earth invests over a 20-year horizon apart from a few super long onlys who are mostly their own money? Or I don't know how that works.
Yep.
But so, and Chris, from that inflation perspective, we just had the CPI this week. It's been a very, very interesting week. Things that people expect to go down have gone up. Things that people expected to go up have gone down. And CPI printed with surprisingly fast gains in headline and core CPI indices. But we've looked at that. I think a whole host of other economists have looked at it. And initially, when everybody thought, "Oh, that's it, it's going to be a major pressure on the Fed to raise," which we keep talking about because we want them not to raise,
Yep.
and actually we want them to cut interest rates so that we don't have to worry about the macro pressure on our sector. But our view is that it's a January effect, and I think that's been pretty widely spoken about. However, that doesn't change the fact that maybe this impacts the next decision that the Fed makes, but it doesn't change the dynamics of 2025. That if these tariff talks and a whole variety of other things that are quite inflationary continue to be pressuring sentiment, then we may see at some point an interest rate rise.
Yeah, I mean, it's interesting. Trump has made comments to the Fed, and Fed's independent. They do what they think is is right and best, and nonpartisan. And so Trump's trying to urge for, we need to reduce interest rates. But I think, look, we're almost near peak uncertainty right now with the, first 100 days of the new administration, and I think that we'll start to see impacts. Hopefully, over the next several months, will reduce some of that uncertainty. Good or bad, whatever side of the ledger that will have, I mean, I think markets thrive on more certainty, right? And will respond accordingly. So it'll be interesting to watch. But, speaking of this kind of buy side survey, Yaron, I don't know if you saw this, but Daphne highlighted this article that I was not as familiar with Armistice Capital. But when I looked at their holdings, they have a lot of biotech and they tend to be larger cap biotech. But they made the news because the Wall Street Journal had an article that basically stated that instead of giving redemptions when you are a hedge fund investor, typically you can pull your money out, whenever you want. And in this case, they said, well, because of thinly traded assets, they issued IOUs instead of giving those redemptions. And so, and this is after a fund that has performed pretty well over the last year, and have holdings in the top 10 like PTC and Supernus and Argenx and Insight, Cytokinetics. So, I there's some disconnect here in terms of why they would issue IOUs unless they're holding a lot of private names, or I'm not sure if the redemptions were higher. But do you know anything about this, or any comments on this armistice news? And I want to believe that it's an anomaly and not anything, a beginning of a trend for biotech hedge funds. But curious if you saw that.
Yeah, we did, and I think in that again, we don't have any information other than what's in the article. A lot, it's almost like there's two different kind of portfolios there in a way. There's a portfolio that is liquid, there's a portfolio of a lot of warrants and illiquid assets, and so the I think that was a part of the issue. Was the part of the issue is a lot of this, as you know very well, a lot of these funds do deals and they do pipes and they take a lot of warrants, which are unbelievably profitable. These things
Yeah.
work out, right? But they're illiquid. And so the
Yeah.
issue when you suddenly have all these redemptions, what do you do?
Yeah. Yeah, I mean, it's interesting if they really are holding that many. I mean, they have 250. I mean, they have consumer names as well, but they have like almost 250 public names. So you'd think that there'd be enough diversity, and even that, not that concentrated, even at the top with names that, I'd be surprised if they didn't hold direct equity. But so anyway, interesting to watch. Just shows the dynamics in the market, and actually the idea of outflows and people taking money out of biotech. That's not a bullish sign, but it might be specific to this fund. Well, it was a big earnings week, and so both of you have covered some names. Yaron, you want to start with Ascendis and Exelixis?
Yeah, absolutely. And one of the things, as you can imagine, this is a perfect segue. We've been talking about difficult markets. I can tell you, I feel like there is an unbelievable amount of innovation going on, and now there's many companies in the actually in the mid cap, upper end of the mid caps, or even now the younger large caps that are turning profitable this year. So this year, Beijing and Argenx are going to be profitable. SpringWorks, which we might come back to in a minute later on, is going to be profitable early next year. Legend, Ascendis, will turn profitable late this year into next year. And these are all on cash basis, obviously, and then Ultragenics kind of late 26 into 27. So we are in the middle of an innovation cycle. Ascendis is about to launch Yorvipath, or they just launched Yorvipath for hypo-PTH. They're off to a really strong launch in the US. They've done well in Europe last year. They're also going to be filing their CNP, their TransCon CNP, which will compete with BioMarin's Voxzogo. They'll file that this quarter. It'll be important for FDA to accept that. So that hopefully will add a nice launch because biotech needs them for Yorvipath this year. We are waiting for the AstraZeneca phase 3 for eniboparatide. That's their version of that daily injectable PTH. That should be coming imminently. We think it's probably going to be a year and a half behind and a little bit of a me too. But that's Ascendis. So that's a stock that many people like now. Exelixis, as you remember, they have Cabo, which is about just over a $2 billion brand globally. It's a TKI for renal cancer and HCC. They should beat numbers this year as they launch neuroendocrine tumors, and they recently won their case against the generics, so we know now they have protection until 2030. But now they have a new cycle with Zanza, which Zanza that's the next version of Cabo. That's in phase 3. So they're finally going to flip the card this year with early data on head and neck, phase 2, and then phase 3 in colon cancer. The early data so far has not ample differentiation against Cabo, and so the stock is kind of in a hover. People are hoping it's going to get acquired, but it's probably not going to get acquired. And whether it goes up a lot or not depends on how Zanza does. So this year we're going to see a lot of data from Zanza, and so there's going to be a lot going on in biotech.
Yeah, I'm curious to get your thoughts on this. It used to be that biotechs would want to delay some biotechs. There are always exceptions, but they would want to delay getting to profitability because, already as a commercial stage company, you're valued on your revenues. But once you hit earnings, right, then you really are judged on the pennies, right, that you're delivering to the bottom line, and really it kind of moves away from the promise of a pipeline or the promise of an engine that can produce continued growth. And just thoughts on that. I mean, Vertex famously remained unprofitable for many years. Pouring more and more into R&D, and ultimately pays off. You could use Amazon in a different sector as an example. But any thoughts on this as you start to highlight these companies that are going to turn profitable?
Yeah, absolutely. And chime in. So I'll give you. You're right. We're sort of what's going on now. We're in the middle. Some companies are profitable for a while, Argenx, Beijing, but they're finally getting to a point that they're unbelievably profitable because they're going to be market leading positions. What Argenx with the FcRn, Beijing with market leading BTK Brukinza. Legend, with J&J launched Carvykti, 3 years ago, and they'll be profitable next year. Again, it's a function of success. Ascendis, they launched Skytrofa growth hormone, what, 2, 3 years ago, and they'll finally be profitable. Ultragenics, that's been a long story. They'll turn profitable in 2, 3 years based on launching 4 additional products. SpringWorks is probably the fastest one. They launched essentially last year, and they'll be profitable, kind of within 2 years. Of course, with SpringWorks, we'll come back to it, whether they'll even be around. But I think there's just a lot of pressure because companies can't continue to raise money forever anymore.
Yep, yep. Sam, any comments on that?
No, so I mean, look, at the end of the day, nobody wants to be owning a profitable biotech company whose profitability is going up at 10% a year. That's not why you invest in it. At the end of the day, if you've got a situation like an Argenix that can show a significant ramp, or you're better off continually investing in R&D, then that's I think that's the way to do it. So I think we'll get to Moderna in a minute.
Yeah.
They hit profitability but I don't want to call it luck, but 1 year or 2 years, and then of course it's all about R&D investment now, right?
Yeah. Well, and yeah, I think, primarily if you end up driving cash flow profitability, your stock currency will go up as a result. Then really how you use that currency, your stock currency and your cash to acquire, build, right? Whether it's internal pipeline, R&D spend, or, external acquisitions. So it'll be interesting. And yeah, Moderna, that there is that black swan event that kind of led them to, over what $100 billion market value. But yeah, why don't you give us an update? What's the latest on Moderna?
Yeah, so they had is one of the stocks that I was talking about being all over the place today. At one point, the stock was halted because of volatility, and I think headlines really have a lot to do with how some of these shares trade into the open. And they reported for Q today. Nothing really new in there for me from a numbers perspective. They had clearly guided before, and lucky happily, maybe that's why the stock's a little bit up now. They didn't change their guidance, which they only really gave about a few weeks ago at JP Morgan. So 2025 is, people were wondering, is 2024 the bottom? But now 2025 could be the bottom. But they have a massive range in terms of revenue guidance, which is 1.5 to 2.5. Consensus still a little bit ahead of that, so they need to come down. But the elements that really got people a bit confused today was this thing, clinical hold on the norovirus vaccine, um, and maybe softer than expected commentary about the timing of their CMV vaccine,
Mhm.
um, and maybe you can keep adding to it, right? And maybe the flu vaccine in terms of the combo, which I have a strong belief in, would be a major thing for them. Having a COVID a flu combo vaccine available, um, that they may need to wait for the phase 3 data for their flu vaccine data to come through before they can get that through the regulators. So a lot of uncertainties there, but I don't think any of them were really that new to me. I mean, okay, clinical hold is always new, but that was easily explained.
Yeah.
So what we're all waiting for now is the timing of that cancer vaccine. I mean, that to me is what is going to change the trajectory for this company.
Yeah, and
If
Bristol had some news on that. Do you want to cover that? And
they
then,
did, they did, and that it wasn't obviously a cancer vaccine. It was Opdualag, which is a LAG3 PD-1 combination in which has worked very well in metastatic melanoma, in that it gives you very similar efficacy with better side effect profile compared to Ipi-Nivo, which is the Yervoy Opdivo combination, which was the standard of care until Opdualag came along, and it failed in adjuvant. So I've been talking to somebody in whom I have 100% trust on the KOL side with regards to melanoma, and there are several reasons that this could be the case. But let's put that aside. It's not good news for Bristol. But what it means is that this was potentially something that was going to change the bar in adjuvant therapy for melanoma, which is, of course, their key data set coming out first for Moderna. So, at least to a degree, a negative has been taken away. On the other hand, this is a trial that I think most people expected to see some positive impact from, and it didn't work out. So, you have that same situation now for Moderna. They had a phase 2 trial that was small, that was controlled, but the control arm, which was just Keytruda, didn't quite look as good as Keytruda should have looked. So you've got this thing at the back of my mind. and your mind going into the data coming out at the end of this year, possibly next year, um, as to whether this is going to hit. And that's it's the,
Yep.
they've made a big bet on it with Merck, right? I think
Yep.
Yaron covers Moderna too, right? Yaron, I'm not sure.
Yeah, I cover BioNTech. My colleague has the luxury of covering Moderna.
Right. Oh, okay. All right. Well, you've got the winner at the moment on an enterprise value basis.
That's right. And remember, yeah, because they've been diversified the whole time. They were also lucky, in terms of profitability.
Yep.
Not so much anymore on that side.
Yep. Sam, you want to cover GSK, their earnings this week as well?
Yeah, no. So I mean, obviously, it was actually a very a good week for them in terms of the numbers that came out. And earnings were last week, I think, as far if I remember correctly. So what was very interesting on this particular comment, that is what I wanted to talk about during their earnings related to Moderna. They referred to the RSV vaccine market as a two-player market. Now, I don't think that's arrogance. When you look at the RSV vaccine sales from Moderna, you kind of believe that perhaps that's the right way to look at it. And that's one of the challenges for Moderna. So that was the comment I was going to make in relation to Moderna from a GSK side. They look and I don't think they've ever said this before. It's so clearly. And I think that comment is based on the kind of conversations they're having with payers at the minute. That just creates extra headache for Moderna and makes it even more important that this cancer vaccine trial reads out positively.
Yep. Yaron, one of the leading indicators that everybody's looking for is the IPO, the health of the IPO market, and it's something that needs to be sustained for a couple quarters. But if you can kind of comment on kind of recent IPOs and the IPO queue, and Sam, I know you've followed Aardvark IPO as well. So, Yaron, why don't you tell us what's the state of the IPO
Yeah,
markets?
so the IPO markets is, I would say, companies in general, let's start with the quality there, have gone tremendously better, right? They're all more mature. A lot of them have data. They're in phase two, more innovative, and those are always going to be the ones who go out first. So inevitably, or kind of earlier companies, but really good pedigree. So if you look at the end of last year, there's been several very high profile IPOs that did very well. And then recently, Metsra and Sionna, both fairly differentiated, one obesity, one in CF. Obesity, you can argue, has got some competition. CF, it's really Vertex, and there's not a lot of competition. So these are sort of the cream of the crop. But if you look at the landmark IPOs from the end of last year, without any news, have done really poorly. So you look at Septerna, down 50% this year alone with no news, down 60 from the highs. Upstream Bio down 54% this year, up down 74 from the highs. Upstream Bio, so what's going on with the market? People want to invest in new assets, but then they start getting, because of valuation or because of the pedigree, but then they start getting pretty worried. And this is the triumvirate that we're seeing, and this is kind of speaks to why I'm thinking that we're probably going to have to bottom at some point in the next, few months, shortly. People are concerned about anybody that needs to raise money at some point in the future. Well, that's 100% of biotechs, almost 99%. Anybody that's going to have competition, and look, there's going to be various levels of competition, and then people start about, market opportunity, which is really too early to start discussing. That's usually a discussion much later on. But that's anybody that has no catalysts or any inkling of competitive data, who will money later on, is absolutely getting penalized right now. And let's see how the IPOs do, 3 months after they go out. The good news, there's great reception. The question is, what's the staying value?
In general, Yaron, are they raising enough money in the IPO where they can get to a catalyst event before diluting at a lower valuation potentially? Are they feeling like, all right, we've got our cash, we'll prove the market with our data, catalyst, or are some of them you think will fall short of that?
So the good ones, and you nailed it on the head. The good ones, you look at Septerna, absolutely. You look at Upstream, absolutely. You look at Metsera, Sionna, they've absolutely raised enough money. I think it's a self-fulfilling prophecy, right? When as these go lower and lower, because people get worried, they begin to wonder, well, if you open a model of most of these companies, they're going to have to raise hundreds of millions of dollars between now and 5 years from now. and
Yeah.
they start getting worried, and that's just, it's a function of the times right now. That will reverse.
Yeah. Sam, the obesity market remains hot. Do you want to cover aardvark here?
Yeah, so Aardvark is one of these IPOs that Yaron was just talking about, and unfortunately, the complete opposite to the Metsera IPO. And Metsera was I would say I don't want to call it plain vanilla in a negative way, but is a standard obesity play. GLP-1, GIP, amylin, all the variety of mechanisms in their portfolio. So, and that's done really well. Excuse me. Aardvark came out with a more nuanced approach, of course, and that's the starting with some of the more genetic weight or hunger issues, let's call it that. And that's the Prader-Willi syndrome, so PWS. And they have a hypothalamic obesity indication also. And so they came out with an IPO. They raised around 90, or 90 or plus 95, $94 million. They'd gone out looking for, I think, 16 to 18. They priced at 16, and unfortunately, it's trading at 13.8 or 13.7 now. So, and that just went out yesterday. So, and they have a differentiated approach to a market where there is a competitor that's already out there with a $2 billion valuation, and that's Soleno. So for people to benchmark them is not that difficult, although Soleno is much further ahead with their drug for PWS, and they're filed with the FDA. It's a different mechanism of action. They have similar kind of data from an obviously much earlier patient, a much earlier trial in terms of aardvark, and they do have ideas for obesity in general. I'm a little bit more skeptical there, but you do have a blueprint to compare it to. So, and because they're different mechanisms of action, you would think that you could do with two different approaches in this setting. It's a very small, rare indication, but so the IPO has not done as well as well. I mean, it's down. So what's going to turn that around? And they didn't raise, talking about the hundreds of $millions that are required. I don't know how much more they need, but certainly not enough from the IPO to get through to the end of their play. I'm pretty sure.
Yeah. Do you think there's less likelihood for M&A on these more niche, rare obesity indications, given everybody's trying to get the big ticket, high prevalence indications? Just curious if that
Um,
blunts a little bit of, Selena's done, it is a great comp, but I'm just curious if M&A, if we're discounting that for these more
I,
niche
I
obesities.
I would for now, because their approach is when you look at the data that they've got, it's very early, and they do show with a fixed dose combination that they've got with ARD-101 plus a DPP-4 inhibitor, that they do show that they could enhance the effectiveness or efficacy of a GLP-1. The issue is that you need a meaningful trial to prove it, and you need to to do that in a way that is meaningful beyond comparison to the triple G that's coming up, beyond comparison to tirzepatide. So these are issues that have to be dealt with, and I just can't see an easy way for these to become M&A targets until they've got some really hard, good quality
Revenue.
obesity data.
Yep. All right, you referenced SpringWorks earlier. You want to, elaborate on that?
Yeah, absolutely. And Chris, to your last question, I mean, Rhythm, right, has been an orphan sort of obesity play for a while, and they're still independent.
Yeah.
Stock's been volatile, but finally doing pretty well. The product looks really good. Covered by my colleague Phil. So SpringWorks. So SpringWorks, as some of you might know, is a company that's got two neuro targeted oncology drugs. The first one is for desmoid tumors, which is it's actually more of a sarcoma, but it's got a little bit of a neuro component at times. And the second one is a MEK inhibitor, now approved Gomekli for neurofibromatosis 1 plexiform form. That's going to compete with AstraZeneca Lugo. Casalugo last year, Casalugo got approved 5 years ago, and it sold 31 globally last year, pediatrics only. Gomekli from SpringWorks has a better label for adults and peds and much cleaner, much fewer warnings. It's also a MEK inhibitor, fully owned, so that should do pretty well to launch in the US and then late this year in Europe. Um, Last year, Zivios got approved for desmoid tumors, crushed numbers the first year. I think consensus was like 45, 50 million. They put up almost kind of around 170 in the US alone, and they're going to be launching in Europe late this year. This is the management that I think historically talked about, getting acquired. The question was always these are kind of orphan oncology assets, originally spun out of Pfizer, so who would really buy them? It's always been a discussion of like an Ipsen or Jazz or Servier or like Exelixis, but the issue is this would end up being a $5 billion deal. And we're talking about consensus estimates of, let's say, 1.5 billion in sales for this portfolio. So all those companies are too kind of small to do this deal. Well, now there's been rumors, and Merck KGaA confirmed that they've been in discussions. SpringWorks, by the way, is reporting next Thursday. So we anticipate a deal is going to get announced probably Tuesday or Wednesday ahead of that. Merck KGaA would make a lot of sense. 60 billion market cap, 21 billion in global sales. They're a neurology company and oncology. They need assets. They're globally oriented. They could take these assets globally. So we think it would make a lot of sense. The stock is trading now up nicely from 32 post JPM, where there was no expectations for M&A. It's at 58, and we do think it's going to make sense, and we're expecting a deal next week.
Yeah, it's interesting to watch the trajectory. SpringWorks has done a phenomenal job from when this was a Pfizer spin out with Bain investing early on, and if you look at the peak of the market, they hit $90 a share, right, in the February of 2021. And just shows you even the most successful companies with some more dilutive financings, obviously they're higher value, but even their recent multi-year peak of over $60 still isn't where that peak was. Just a kind of a contextual data point for the last 5 years or so. So with that, Sam, you also had another Zilio and AbbVie. Do you want to talk about that?
Yeah, so that's an interesting one. And talking about companies trading below cash and nobody caring, etc., it doesn't mean they don't have anything interesting. Now, this is a deal that Zilio signed, and Zilio had an enterprise value below, well, obviously, negative enterprise value. And when they announced the deal, share price went up like 117%. It's come back a little bit now. But if you add in the cash that they're getting from AbbVie, they're still trading below cash. So, and there might be a fair reason for it. So let me just describe what the story is here. This is another mass T cell engager. So we've talked about Janux, which is last year. We talked about Vir, which was more this year with the data coming out. And both of those stocks went up, and then they've retraced a little bit. And here they've done a deal with AbbVie, but it's an option deal, i.e., they're going to Zilio is going to be doing the work with the masked T cell engagers, which is their technology. They can mask the CD3 binding site, the antigen binding site, or even they have another version of their T cell engager which brings with it a co-stimulatory molecule. They can also mask that. Now, the deal is to do discovery work with AbbVie. So it's not on any of their particular pipeline assets, from what I understood at the minute. Which of course means that they're likely to be spending the money they've just got from AbbVie. And when they spoke at the on their call they only have now cash to first quarter 26. So that's only 12 months, and that means that they're going to have to raise again. And that would clearly need some news that or some reason for investors to be wanting to go in, which of course the AbbVie deal might help them. And it just, are we at the beginning of a renaissance of the mass T cell engager world? Having watched Cytomix and Bristol Myers for a long time, I don't know. I don't want to. I don't want to make pronouncements like that until we see updated data from Janux and Vir with longer duration follow up, etc., and genuinely see whether higher dosing can give them higher efficacy. I think there's still some wood to be chopped here for the masking world, but that was an interesting example of a negative enterprise value company
Yeah.
that managed to get a deal with a
Well,
meaningful pharma
and I'll
company.
just add, we had a company we invested in, Landos, that was public, trading at a negative enterprise value. That we did get a 200+% premium from AbbVie. So they are definitely shopping in not averse to going for public companies that they feel are undervalued and fit their pipeline well. Last topic before we move to our special guest from BioCentury. Do you want to just cover Anaptys Bio and their drug in RA?
Yeah, I mean, again, that's been quite interesting. As some of you know, we have a very active at Bloomberg, a very active client anonymous chat, where when the data came out, a lot of people were questioning it and whether it was good enough, etc. And in the end, this was an R8 data set that came out, and the share price kind of speaks for itself. The stock was trading at I can't remember now, maybe $12 or $13 or thereabouts, and now it's just over 20. So what what is the approach? So Anaptys is the drug is essentially a PD-1 agonist, which immediately scares the bejesus out of me a little bit when you're going in doing the opposite of what you do with immuno-oncology drugs, which is to activate, to kind of to tamp down the T cell response. And that worries me a little bit, of course, as a principle. Then the data reported in rheumatoid arthritis, so the theory is that you are calming down the T cells that are causing an immune reaction. And so you're basically creating an immune suppressive environment with a PD-1 agonist. Let's put it that way. And so, of course, the data reported and lots of soul searching, lots of questions. But when we look at it from just without any position, obviously, we don't cover the stock either. It seems decent in terms of the 12-week data. Seems comparable to what we've seen with current agents, particularly Rinvoq. It looks comparable. You have to also dissect out the patients who have already got experience with prior drugs, current therapies, but the data looks comparable. And the thing that really confused people is what happened between week 12 and week 14 of the trial. Not really worth going into the detail here, but that was one where it caused a lot of soul searching amongst analysts and questions on the call. What is interesting, and I'm going to give one hypothesis for this and then stop, is that Lilly had a similar approach. They were, and their data, when we compare the Anaptys data to the Lilly data, looks quite similar. But Lilly decided to discontinue that product.
Yeah.
Now, is it because Lilly thought the profile of the drug, of their drug, was not good enough? Or was it simply because Lilly has a lot more
Shots on goal in the pipeline.
strings to
Yeah.
their bow than
Yeah.
Anaptys does, right?
Yeah.
So you want to do obesity, you want to do Alzheimer's, you do oncology. Did you need this one too? Maybe
Yeah.
it's one of those two. So what
Yeah.
time will tell, but I think the data was better than some folks
Well, that's well.
worrying
RA
about.
has been one of the more elusive I&I indications, and still has a lot of unmet need and huge opportunity for those that become best in class in that category. But let's move to the policy front, and really happy to welcome the longstanding Washington editor of BioCentury, Steve. And Steve, you're gonna have to tell me, is it Usdin or Usdin? Can you hear us? And are you on
Yep,
stage?
I can, and you can call me anything, just not late for dinner. Um, I say Usdin, but
Great. All
I'm
right.
not
Well,
particular.
Steve, you've followed obviously what's going on in Washington for a long time, but also, in the last, several months with the new administration, and written a lot about it. So, our audience is always trying to keep on top of the industry. I mentioned earlier on this that, we're probably near peak uncertainty. There's a lot of speculation. We can try to guess what is going to happen. We know some of the actions that Musk has taken with Doge, efforts. But again, these new confirmations have not really been in place. We haven't really seen what they're going to do other than the cuts. But maybe give us a high level view as you see it. As we sit here today with what's happening, I think this audience is probably more interested in FDA, followed by NIH, followed by HHS and broader uh, kind of applications. But yeah, would love to hear your perspective, and we'll have an exchange around it.
Great. Well, you hit the right word when you said uncertainty. Everything is uncertain, right? There's a lot of moving pieces. High level, the way I look at it, there's pluses, there's negatives. or you could call it opportunities and risks, and then there's uncertainties, right? Opportunities, I think there's opportunities, and companies are going to take advantage of them for policies that are going to advance onshore manufacturing in the United States of pharmaceuticals. I think we'll see a lot of moves in the coming year for companies to onshore a lot of pharmaceutical manufacturing. I think there are going to be fixes to the IRA Medicare drug negotiation program. Not clear how far they'll go. PBM reform, the industry is likely to get return to immediate expensing of R&D costs restored, a return to traditional antitrust enforcement, legislation, bipartisan legislation to restore pediatric priority review vouchers was introduced 2 days ago. I think that's likely to go forward. Negatives, it's what you alluded to. There's going to be staffing cuts across government. FDA is not going to be completely immune from them. Doge has proposed really large cuts at FDA. RFK Jr. has talked about cutting some of the scientific leadership also. We don't know how that's actually going to translate into action and how quickly it is. Over the long term, I think it's clear that that there's going to be an erosion in staffing, and there, for example, there are rules that for every you can only hire one new person for every 4 people that leave. There's going to be a more or less aggressive return to office campaign, which is likely to drive some long-term FDA employees to leave. And then there's just a tremendous amount of anxiety and lack of and poor morale at FDA right now about what's going to happen. We don't know. Maybe when Marty McCary comes in, he rights the ship. We'll see.
Yeah.
There's
So
all.
yeah. So I'd like
I
to.
just yeah.
Please go ahead. Continue.
So just really quick, a couple other things. There's an enormous amount of anxiety at NIH about short and long-term policies that could dramatically impact biomedical research. Obviously, they're the foundation for a lot of what the industry does. And uncertainties. There's opportunities for tremendous positive changes and reforms at FDA, and there's likely to be some kind of commission that's going to be created to recommend reforms at FDA. That could be tremendously positive. There's also a chance of intentional and inadvertent policies at FDA that really erode its ability to function, even to meet PDUFA deadlines and its credibility with the public. We don't know which way it's going to go. Another big uncertainty, and then I'll finish. We don't know whether Trump will revive the most favored nation international reference pricing policy proposal that he made in the first administration. RFK Jr. alluded to it during the confirmation hearings. And, I think that's kind of an uncertainty that's going to be hanging out there for the whole administration.
Yeah. Very, very astute kind of analysis, Steve. And it sounds like you're going to be kept busy over the next year or more, right, with some of these really hot topics. And you covered a bunch of them really well. What I'd like to drill down on with this audience, and I also, welcome Yaron and Sam to weigh in as you see fit. But so I'm going to start with FDA, right? So FDA, I think that the greatest concern that, and I'll just speak for myself, but I think represents a portion of the audience, is that and don't need all these extra programmers or other services. I mean, these are reviewers that are spending a lot of time with user fees paid for by the industry to look at data and analyze it. And we all have dealt with the idea of meeting requests, getting written response only, getting delays. This is not an agency that's known to just have tremendous. I mean, we know and we interact with the FDA folks who are always working really hard, right? Um, and that's not to say that there's not a need for a hard look at potential reform, doing things differently. We've heard this coming out of the hierarchy for a while.
I think we lost Chris. Yaron,
Yeah.
can you hear
Oh, good.
Chris?
Yeah. I lost him. I was wondering if it was on my end.
No, Steve. I think we just lost Chris for a minute there. I'm sure he'll be back very soon. Steve, Clearly, Chris is worried about the FDA situation. So, how do you think that's going to? Where is your best guess in terms of how that shakes out?
We really don't know. Okay, so I think it's clear that FDA is going to experience cutbacks. It's not entirely clear where they're going to come, right? So if you had a 10% cutback in FDA staffing and they all came out of, for example, the tobacco center, then that wouldn't really impact the biopharmaceutical industry at all. If you have 10% of the review staff leaving, that would mean that you would start missing PDUFA deadlines and you would have really serious problems. I think the other one of the things to look at also is at the top. The I think one of the key levers that Marty Makary is going to have, and it'll really be an indicator of where FDA is going to go going forward, is who's going to replace Patrizia Cavazzoni as director of CDER, because the CDER director really has more influence day to day on the things that are vital for the biopharmaceutical industry than the FDA commissioner does.
Right. And then just thinking about this, in your analysis, and I don't want to get political about this, but or force you to be political about it. If you think back to the times that you've been looking at the FDA, would you say that in most of these, particularly the FDA, any of these public offices, that there is fat to be cut without really cutting into bone or muscle?
Yeah, but it's very difficult when you're outside of an organization like that to make intelligent comments about how it should be organized or whether there's fat or there isn't fat. It's easy that here's what I do know. Going in, and this would apply to any of the businesses for anybody who's on this call. If you were to go into a business and say, well, first we're going to fire 10% of the people or 20% of the people, and then we're going to do an analysis to determine who's needed, and if necessary, we'll hire people back. You would think, well, that's kind of backwards, right? Like the first thing that you should do is go in and do a careful analysis and determine who's needed, who's not needed, who might need to be in a different place or doing something different, and then you start acting. So the problem, I think, is not determining whether or not there's fat at FDA that should be cut. It's whether you make that determination before you start cutting people, and that's the real concern.
Right.
Yeah.
Yaron?
Well, yeah,
Oh,
I mean,
And
Chris is
sorry I
back.
dropped off. It sounds like you guys did hear the question about FDA, but Yaron, do you have a follow-up question?
yeah, no, I was just gonna maybe make a comment, and then Steve, it's a question at the same time. I mean, look, if a board of directors forces the CEO to immediately tomorrow fire 10% of the company, the board still holds the CEO accountable for performance. When the president's going to force FDA to shed whatever number of people, um, who's still gonna guarantee the performance of that agency? And
Well,
that's the
I think
problem.
Well, I think that I think you can have a certain amount of confidence in Marty Makary. We really don't know a lot about what his intentions are and how he plans to run FDA, but I think we also can assume that he didn't go into this wanting to fail, and he's going to learn really quickly, and he's being told by insiders already that that one of his important jobs is going to be to identify the people who need to be protected and to exert his influence to protect them. So I think that Makary and I think others in the administration are going to feel a responsibility. I mean, ultimately, everybody in the country feels a responsibility, they have to make FDA succeed. So I think that if there are serious problems that occur, they will be inadvertent. It's not like some agencies where people are going in and saying, well, this agency doesn't have an important mission and shouldn't exist. I think it's more that there's a tremendous scope for people to be careless and to do things in an inadvertent way that have consequences. One of the problems with FDA and one of the concerns is that for example, it takes a very long time to train a reviewer. I've heard from people in FDA that they're really not productive until they've been there for 2 years, right? So if you get rid of people and then you determine, well, we're missing PDUFA goals, we're having problems as a result of that, you can't turn that around immediately. It's going to take time, and that's going to cause damage.
Well, there's
But
also,
again,
yeah, a lot. There's
mhm.
also a lot of people at FDA, as we all know, do research. And the question, are those the people who are going to get targeted? And maybe not the reviewers. I don't know if you have an opinion. But then secondly, there's also a question, and Vivek brought a lot of these, things out publicly. Is the FDA too slow, too bureaucratic, too regimented in the way they review drugs? And so they release the bar on the efficacy side.
Well, so that's a two-part question. Are they too bureaucratic? Are they too slow? Absolutely, they could be faster. Absolutely, they could be better. And I think most people at FDA, many people that I know who are there, would acknowledge that. And they have ideas and positive ideas about how FDA could be improved. I think that, and I think that there's a there's a real chance that McCary will get in there and he will, ask people who are there who know actually how things work. What are the top 10 ideas that they have or top 3 ideas they have for improving the way that FDA functions? If they do that, he could be very successful. That was basically what Scott Gottlieb did when he got there. He asked the Senate directors and the staff for ideas, and then he promoted the ones that he thought were going to be the most effective. So there's a great opportunity. If we want, we can talk about some of the low-hanging fruit. There's a lot of low-hanging fruit of things that could make FDA more effective and better. About the efficacy standard, the only thing that I would say there that I think has some real chance of happening is around ultra rare diseases. Patricia Cavazzoni has just recently left. Janet Woodcock and others are really pushing hard to persuade Congress and to persuade FDA to create a different standard for extremely rare diseases, because the kind of paradigm around regulatory flexibility hasn't isn't working
Yeah,
effectively.
let me add, this is a great conversation because I do think there's a little bit of a paradox, right? I think this idea that the administration wants to really destroy inefficiency of the regulation. And this is across the board, across agencies, and it does seem that the ultimate goal is to make things easier, faster, more efficient to get drugs through. Maybe the safety bar goes up, or even post commercial commitments, but efficacy, it goes along with the right to try. I think the bipartisan support, as you just mentioned, Steve, on ultra rare, but just pediatric review vouchers, there does seem to be a will to get drugs to patients that need it more efficiently. But I think that, and Yaron, you mentioned this, like if a CEO is asked to fire 10% of their staff tomorrow, it's the timing, right? It's the idea that that is likely going to have unintended consequences of acting so quickly, as opposed to, we have a 3-month goal or a 6-month goal, right, to reduce it, where you can actually go in and you have the trust and belief that they're going to keep the right people, that they're going to really understand how to consolidate, how to improve processes. And by just cutting staff, I think you lose that opportunity. The other thing I'll say, and
Well,
yeah, I'm sorry, go ahead, Steve.
I, I'm sorry to interrupt really quickly. The real question about FDA is what is the goal? Because it's irrational to go in there and say, well, the goal is to cut staff, especially since most of the drug review staff are paid for by industry user fees. So it's not as if cutting those staff is going to save the taxpayers money. So if and that's where I think you have competing factions within the administration. You have some factions, Doge, for example, who their metric for success is the number of people they can fire. Okay,
Yeah.
and then you're going to have other factions who are going to go in, and hopefully Marty McCary is going to be in this group, who are going to go in and say, no, the goal is to say, how can we get more safe and effective drugs to the American people in the most efficient way? And it may not be that firing people is the answer, right?
Yeah.
So there's going to be a tension between those factions, and there's an overall kind of ideology, and it's not just Doge; it's also coming from OMB, that regulation is bad, that federal employees are bad, and that you have to do something to eliminate them. Whereas people who are in the biopharmaceutical industry obviously don't oppose strong regulation from FDA. They need that for the industry to thrive. So the question is, can they kind of carve out an area where there's some nuance around that in this administration? And I think there's going to be a tug of war, and it's really unclear at this point who's going to win, or if it's going to be some wins and some losses.
Yeah, let's pivot a little bit in the time we have left to NIH, and I'll start by saying this. I think many of us in the industry have I'm 33 years in the industry and been a little frustrated with the quality and the throughput that NIH puts out. We all agree that we need that government grant money. We need government research for basic research to fuel the biotech industry. I don't think anybody argues with that. But when you look at a $50 billion right budget, and you look at some of the leading venture funds, for example, who do new technology startups, that's a lot of capital being deployed for this early research and drug discovery. Yes, it's riskier. It's why the government should do that, versus more, commercial private investors. But so I think most people would say, wow, I wish there was a better way to have almost like an industry partnership to drive and guide that use of dollars. So I think most people would say, wow, there is a lot of inefficiency there. Yeah, nobody likes to see research projects in the midstream get cut or stopped. That's not fruitful. But I think we're just unsure what this looks like on the other side. And are there people, and is Bhattacharya, I know you highlighted a article that he published, but any sense of what the mission is there, and is it to, yes, we're going to cut the you know the fees, the administrative fees, but have they articulated a goal for what they want the NIH to ultimately deliver to our industry?
No, it's still unclear. And there's you could look at it again, threats and opportunities. If you look at the things that Bhattacharya has written over the years about NIH, he's had criticisms of the NIH that I personally agree with, and I think most people on this call would agree with, that it's too risk averse, that that the age of people who receive first grants is too high, that too much of its research is Me Too research, and it isn't going in directions that are going to lead to real innovation. So we're certainly not getting $50 billion a year of science out of the $50 billion a year or so that we're paying for NIH. On the other hand, he's made a lot of statements about COVID-19 that are not based in science, and that suggest that that he may try to take steps to kind of reverse some of the most important work that FDA and that NIH does on infectious diseases. And as far as the relationship with industry, one of the things that he has said, and that RFK has said consistently, is that they believe that there's too much influence of the pharmaceutical industry across public health agencies, especially at FDA and at NIH. So that's, I think that's a an issue of concern, because obviously the interface between NIH and industry is essential. What's the point of doing all of this research if it doesn't end up creating products that are going to advance the health of the American people? So there's a lot of angst at NIH. There's a lot of concern that that there are going to be moves that are going to be made that are going to damage the ability of NIH to fund cutting edge research, that it's going to disrupt it, that there's going to be cutbacks in the amount of money that goes to NIH. And some of the immediate things that might impact would be disrupting relationships, research relationships, collaborations that industry has with NIH funded researchers. Perhaps it might change the ability of industry to get SBIR funding, which is really important for some of the small biotechs especially. But again, we don't really know until we get a little bit farther into it. But I would say that the red flags are more serious at NIH, and then especially then going one more step. And I know that's not directly related to investments that people are making, but the concerns about what's likely to happen at CDC, I think, are also warranted, and they could have public health implications.
Yeah, although, and correct me, but I saw Scott Galieb just did a shout out and was really supportive of the new director of pandemic planning. Is that correct?
Oh yeah, it's it's an interesting situation, because there are some really competent good people who are being recruited into the administration for some critical jobs, and then there are people who you really wouldn't want to see near the levers of power also. So it's complicated.
Yeah. Well, I know, look, I know you've also reported on the sentiment. We know that anytime there's a change in administration, and this is a bigger change because you've got, you had a little bit of bipartisan support against kind of the new regime coming in. And so this really is more of a sea change. So I'm not surprised that sentiment across these agencies are down. And it reminds me, I've done a lot of M&A and had to integrate folks. And you get two responses. You get the response like, no, we can't change. Everything is really good and you're going to ruin everything. And then those that are willing to step up and say, all right, what do you want to do? And let me help. And those are the ones that we usually end up keeping. And the ones who end up leaving on their own or get dismissed are the ones who aren't kind of willing to be part of that change regime for the better, right? There's a lot of good skill sets. So I just appreciate, Steve, that that your reporting remains kind of objective and that you have that balanced view that you've shared here, and that we don't like to raise alarms before they're notable. But I think there are some concerns we all have with FDA, the staff cuts, et cetera. Yaron, Sam, any final questions as we wrap here for Steve to close,
No,
or
I'm all good.
Maybe Steve,
comments?
a 10-second question, I guess, for you. A year from now, are we feeling better, the same, or a little bit more anxious about what happened in FDA?
I think a year from now, we'll either be feeling a lot better or a lot worse, because that's about the time frame when these things are going to play out. We really don't we don't know. It could go really well. It could go really badly. But I think that's the right time frame to think about things.
All right.
We'll have a good sense of things about that time frame. We'll also know within that time frame, for example, have a good idea what's going to happen with the user fee reauthorization. Is that going to go forward? Is it going to be revamped into something better, or is it going to get blown up and cause real problems?
Excellent. Well, look, I hope the audience enjoyed this. Steve, thanks for joining us. Your insights are really helpful to our audience. And thank you all for tuning into Biotech Hangout. And we look forward to seeing you next week, same time, same channel.